All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for January 9th, 2023. We'll start with the sniper trade of the day. This is Microsoft. We highlighted Microsoft as an exceptional value play this weekend. It's on to 3 minutes. Here's where it closed. This was the gap up. Here's the OR3. Second bar, it exceeds that, so we're long. Standard risk box. It immediately fails. It resumes. So I take the re-entry, standard risk box. Standard exit at the edge of the dragon. Gave it 4 bars to make a new high, but it didn't. The RL10 rolls over, crosses the baby dragon. I just harvested at the edge of the dragon here. So we just take that, and that's about 0.5. Caught a 2 re-entry. Holds support at the edge of the PSAR. Crosses the dragon. So caught a 2 re-entry, standard risk box. Standard exit at the edge of the dragon. Again, we gave it about 4 bars to work. It didn't. RL10 rolled over, crossed the baby dragon, out at the edge of the river. That one's about +1. Caught a 2 re-entry. It takes out the previous peak. Held support at the edge of the PSAR. Crossed the dragon. So standard risk box. Once again, it rolls over. And this time, because the favorable excursion was not as large as the previous two, it feels like it's running out of steam. So I just want to take my little 0.5 while I can and just eat that up. I was thinking of this one as a Kata 2, but I think that's probably an error. That's probably an SSC because I got the lower lows, standard risk box. I mean, I was feeling that the move was up. That one is not working. So by this time, what I'm noticing is lower highs, collapsing dragon. So this one doesn't work. So I take the collapsing dragon with the standard risk box. Take the standard exit. It had 4 bars to fail. It didn't. The R10 rolls over. A little bit of a bad fill, but we'll take that one. That's about +1. Caught a 2 to the short side. The whole market is getting weak by this point. Here's a lower high. It crosses the dragon. So take it right here. Instead of waiting for the collapsing dragon or this collapsing dragon, just take that as a caught a 2 to the downside. Standard risk box. That gives me a favor. I get about 2 legs down on that one. So that's about +1, about +2. And that was it for the day. So this was, there weren't really powerful moves on this. This was kind of grinding all day long. And the weakness in it was more pronounced than the gains. So although it did try to make some upward moves, the short side ended up being better. And then if you look at this thing, it's almost perfectly symmetrical and ends up where it gapped up to. So this was kind of a neutral day. This was some early optimism in Microsoft on the value play, and the traders cashed. And then there was nobody believing in this thing overnight. So this still feels like an intraday trade only in Microsoft. And that was actually kind of a mirror for the whole market today, was a failure to follow through the rest of in the afternoon. So the sniper trade of the day, that probably collected 4R by the time we're said and done. Let's see. Here's our 30-minute chart. So this is the S&P. SPY on 30-minute. So that's our one-day move today. And again, you can see that thing ran up and then finished poorly to close near the low of the day. So this was kind of a vote. The failed breakout. Not persuasive. So the threat really is that tomorrow it comes right back into this, right about around 383 would be the downside target. So if we get that same size move tomorrow, 383 is in play. Of course, if it breaks above 395, we're happy. But this persistent selling here does not inspire confidence. So this is the daily bars on 30-day look back. So here's 1 day, 5 day, 10 day, 30 day. And you can see that we had the overnight gap up and then sold off poorly to come back just a fraction below yesterday's close. So that actually feels like a rejection of the upside move. And so now that means I got to be mindful of any break below today's low is going to be a continuation of that downward move. And so I'm looking at, peak of the dragon, spine of the dragon, belly of the dragon, which is also this RL10 here, and then this RL10 and the 10-day low. So there's the price targets to the downside. And we'll notice that if you get some days like this, even a day like this, with not even exceptional range, all of those, downward moves of that magnitude could all bring this down to 378 tomorrow. So we're going to, that would be about a 3% drop. So that's not impossible. So I look today as sort of a caught a 2 that really couldn't hold. And so I'm mindful of the downside. Longer term, You know, the 9-day, or I'm sorry, the 3-day in SPY. These are 3-day bars. We're still getting that upward feel, and on a 3-day basis, this is still a reasonable upside move. And it closed across the baby dragon today, and really all it's got to do is get through about 405 for this really to look good. So we're still on that longer term, still looking at a COTA 2. So there's still upside optimism to this on the longer term look back, in spite of today's, I would think of that as a setback. When I look at the 9-day, we are still above the PSAR. The RL10 is still pointing up. The 9-day still is higher than it opened, so we still have some upward momentum. But it's got to start following through here today or tomorrow for that to still be in play. Still trying to find traction. This was not panic selling today. All right, let's go to the individual sectors. So today was a pretty tight cluster of performance. S&P was basically flat at 0.06. Diamonds were the only index worse. That was at minus 0.3. Then the Russell at 0.17. Treasuries at 0.53. It's up to 105.74 now. Then the Qs and emerging markets up 2/3 and 3/4. So a pretty tight cluster of index performance. So that is not evidence of panic selling. And it's also showing that the strength is still in the internationals, more so than the U.S. All right, so let's look at the upside. All right, so the upside sectors first compared to the S&P, which was also the boundary between winners and losers today. So you get residential real estate, commercial real estate, or I'm sorry, Squarespace, and then lumber at 0.16. Agriculture, VIX, the other lumber, discretionary and materials up to 0.63. Mexico, 0.84. Tech, blended commodities, and lithium, 1.35. I mean, this was actually a good sign that tech was, the S&P tech was good, and it was better than NASDAQ tech. So this is like old school tech, which is why Microsoft was kind of disappointing, to my view. You'd like to have seen it done to close better than 0.97. So oil, uranium, Bitcoin up to 1.97. The FANGs, this was really the good news story for the optimists today, that the great big mega cap tech companies did well today. Clean energy and ARC Genomics 3%, ARC 4.5%, Tesla 6%, up to 119. Ethereum another 10%. That's making me look like a genius right now. We sent the alert out for ETHE last week when it was at 450, and it was trading at a 50% discount to its net asset value, and it's responded with a plus 50% just since last Thursday. So, I mean, that's radioactive, so no place for a nervous person. Individual companies that did well. Coinbase recovering 15%. Alcoa, massive goodness, 8.43. So here's our, now here's where our semiconductors all had really good days. Nvidia 5%, Intel 2%, Texas Instruments 0.87, all better than the NASDAQ tech. So the value play in semiconductors is on. Devon Energy had a good day on a day when energy had a good day, so that's all good. And then in the value play for the tech, Microsoft was better than Apple. Apple underperformed the Qs and underperformed XLK and underperformed Microsoft. So right now it feels like Microsoft is the better play. Checking below the line now, below the S&P. Excuse me. So we saw that Alcoa had a really great day, but our other two metals were really disappointing, U.S. Steel and Cliff. So I'd be looking for more weakness out of them tomorrow. And that's significant selling in the metals on a day when the market was much better than that. So again, to the downside, our baseline S&P at flat at minus 0.06, Aussie dollar 0.3, finance, commercial real estate, Brazil, silver, wheat and precious, and staples. So these were all the things that were winning last week. So last week we saw that that finance was the best performing sector on a relative basis, and Brazil, Mexico, Latin America were all doing really well. Silver and wheat and precious metals and staples and the diamonds, all of those value plays were doing very well last week. So is this a rotation up into tech and the emerging markets? Is this the resumption of growth? Well, it didn't fail today. And if this is just sector rotation, then we should be prepared for more tech tomorrow, and especially the semis and Microsoft. That's the way I'm reading that. Marijuana rolls out as the weakest of the day at minus 3.4. Let's look at the traders today. All right, so here's Woj. He's got J.P. Morgan. So he's looking for the finance sector. He actually got the OR3 short, and we gave back way too much of that. You get that move with 1 unit of risk, so you're holding 1 plus 2R. We can't let that come back and only keep 0.8. So my coaching on that would be, after the second leg down, a 1, 2, 3 exit would get you out here at the edge of the dragon. You'd be getting out here, and either one of those is preferable to this. In Merck, he takes the OR3 and gets paid, and again, you're giving back too much, but that's 2R right out of the OR3, and at one point that was up 4R. So I think when you get this crossover and you take the edge of the river right there, that'll give you an extra R. And then this collapsing dragon, oof, that was a 10R trade today on a single position. So we got to pull the trigger. And then I'm going to show you, okay, maybe the simplified sniper is too simple. And I'm going to show you that if you put the Z3 lines back on, you'll end up seeing this as a sideways quiet channel that you would stay out of until after the lunch. And then when you get this collapsing dragon, you still get plenty of alert to get in there. I'm going to show that on Tim's chart. Woj also now in, so this is Devon. Uh, the OR3 was slow to get in, and then I think you can stop and reverse on that with a big gap up and the market rising, and that trade is available. That trade on the short side is available, and you shouldn't lose money on that one. But after this loss, he reverts elsewhere. This stop and reverse, he waited for the OR3 to hit, and that's a scratch instead of a micro gain. They're just Tesla was all chopped today. U.S. Steel. Uh, here's one that the OR3 inside the OR3 there was a three there were three MMRBs. So I don't mind you waiting for that one. But if it reverses on you quick, then that stop and reverse gives you a 2R trade up in here. He reverts all the way over to Apple then. So the OR3 in Apple pays off. This was a tempting secondary position, but even so, the exit was now that was perfect. So the sum of all symbols today was 2. I think with better play on the open risk or the open gains, that should be more like 5. All right, Tim. All right, so don't stock a bullish OR3. Or if you do, you just got to realize that's a 4R trade. And the consequence of that is that when you're trading in the chop, when you go ahead put the Z3 lines back on, and you would never take these trades because you're waiting for a Z3 breakout instead of taking every little tick. So if you take the OR3, you net +4, and then even if you take those trades, you still have bullets left over for a 10R trade. There was a lot more to that to follow. So I'm going to say, Tim, put the Z3 lines back on to give you visual insight of staying out of the chop. And if nothing else, 2 in a row, don't take those trades. 2 losses in a row, let it reset. And then put your Z3 lines on. And when you do, you're going to see... is it this one? No, it's... I just had that. There we go. Yeah. So this is that Tesla trade, and you got chopped around here a lot. When you see that compression, you just stop and wait for the minimum manageable risk box. Then you probably can take this trade and scratch, but it will keep you out of monkeying around inside here. So put the Z3 lines back on to help you see the compressions, and you'll be glad that you did. Let me see if I can pull up Merck real quick. Yeah. So this is where the Z3 line. Once you see that compression rolling over, and that was your OR3 trade, by the way. Then once you see that rolling over, you don't take those trades inside here. And then on the Z3s, you're waiting for the breakouts. So you don't even get the trade until here, and then that gives you a 10R trade. So when the Z3 lines compress to a frog box, which that is, you don't take those trades inside until you get the Z3 breakout. So look at putting those back on. And then another thing is, when you're trading inside the Red River, that's the chop. Like, you don't notice what happens here on that Z3 breakout. Winter. Breaking out of the Red River. And so you'll end up taking that trade all day until the winter becomes spring, and then look what that does. So you get all of that trade just based on the MACD. And as I showed earlier, that although these little Tesla chops, you wouldn't take any of those because of there was no Z3 breakout, so that's going to help you. Now my brother Alcoa, big gap, MMRB off that, buys it. There's a 2R battle drill, second entry, third entry, rolls over, cashes for 11. His next let's scale that back a little bit so we can see the whole thing. He gets a 1, 2, 3 entry, 2R battle drill add, 2R battle drill add. It rolls over, so he exits in the money. 8.8 and 10.7, so that's 19R using the automatic 2R battle drill. Merck, the one we just looked at, if you're using the 2R battle drill, instead of just that first position leading to 4R, you get the 2R battle drill twice for 6.6. His sniper rules keep you out of that whole choppy period. Notice that it's when it comes into the winter, it comes out of the Red River, coincides with when his rules get you short. Collapsing Dragon. Second position, 2R battle drill, 2R battle drill, standard exit, standard re-entries. 23R in Merck. 42.5 for the day. It's disgusting. That's filthy. His home study course on the sniper is available. If you want coaching and in his trade room, you can do that for a little bit more, but that's pretty straightforward. Good work, brother. Daily reports. Go to dashboard 1. We're still at 2.5% below the 200-day moving average, so we're still in bearish normal conditions. Still with a slightly positive tip available. The risk Z is still allowing us. It's starting to fade a little bit, so the upside had better follow through like tomorrow, or it's starting to roll over to look to the downside. That was the warning from today. The min pains, Alcoa now jumps up into that because of today's extraordinary move. But the max pains, including United Health, Microsoft, Tesla, Pfizer, and Walgreens, remains. Still some weakness in the energy. Look, you got natural gas, oil exploration, and blended commodities. So the winners continue to win. Lots of dojis today, because once you factor out the gap, the range was not large. There was a triple screen in Merck. Merck and Pfizer were the two big losers today. Tesla was a big winner at 5.7%, and Alcoa at 8%. I mean, Alcoa is in play for tomorrow. If that's not your number one symbol, then I'm not sure why. It had a big breakout on 10-day and 1 month. DuPont Chemical quietly had a breakout on 10-day, 1 month, and 3 month. Pfizer had a breakdown on the 10-day and 1 month. So looking for those extreme movers. Today, big money made and big breakouts in emerging markets. Gold in Europe. So the globals are still doing pretty well. The Qs had a little positivity for a change, as did Treasuries, the anomaly, and materials on the strength in Alcoa. And a little bit of weakness creeping here into healthcare, which makes United Health even more vulnerable. In the auto framer, these four here are the ones that are the furthest from their 10-day high, and those are all prime candidates to be short if the market starts collapsing tomorrow. United Health, Microsoft, Agriculture, and Tesla. Pretty good candidates for short. No squeezes today at all. Although you can see, interestingly, just the lack of volatility. It was number 2 on terms of small range today. And its R10 remains $1.20. Brazil, on the other hand, was a relatively large mover. Regression line fractal framework. So the stalking the deep value or those that are collapsing. No surprise, Tesla, United Health, Apple, Chevron, ExxonMobil. Monitoring the overheated or the relative strength winners. Boeing, JP Morgan, Nike, Cisco, Intel. You know, to me, Cisco, Intel might be the stealthy trades in tech if tech begins to improve. ETF 100, the value plays. 3 out of the 5 are in energy. United Natural Gas, 11 ATR below its RL 270. What does that even look like? UNG. Yeah. Let's go to the daily. Sorry. Yeah, so natural. Let me go to the sniper. That's actually better. Yeah, so his. Let's see. His RL 270 is up here at long-term fair values at 25, and prices way down here at 12. That's what 11 ATRs of value looks like. You got to believe there's some possibilities there. Natural gas, this is the 3-day. That's actually the break. You know, today it broke and the PSAR flipped. So yeah, it came down and resolved, but man, if it breaks below 12.4, I think you got to be short that. But if it can hold right here, you know, I think I'm a buyer at 12.5 with about a 10-cent risk box, just automatically. Because I think you got to think that's going to 12.75. Now looking at some sniper targets here. Just a couple Godzillas. One raging Godzilla, BAX. What does that look like? Yeah, that's what that looks like. So that's a 150-day look back. So price is down here. And as you can see, that is the 150-day low, and also the 30-day low, and the 10-day low. And look at the size of the 5-day volatility compared to, I mean, that's almost 40% of the 150-day volatility. So Baxter International, more failure coming, or that's such an exaggerated sell-off that you're going to get a big move out of that Godzilla trade right there. That thing is en fuego. And Baxter has a 23-cent R10, which means it can move $2.50, which is a 5% intraday range. That's extraordinary. And that's just as bad as can be. So, BAX. Now, if we look at marijuana, that was the only Godzilla from the tactical set. And again, you can see, let's see, yeah, there we are on daily. And we're within the bottom 10% of the 250-day range, right? And the 30-day low, 150-day low, 10-day low is all here. So all of that is weakness. So it could Godzilla to the downside, but if it doesn't, if it holds here, and it just comes back halfway, then 10 is in range from 6.8. So that's going to be a big move once that thing starts going. It's in a stealthy, and to me, at the first sign of weakness on that falling out of the dragon, I'm short that thing. And then I'll add a second position here. So I'd be short here and 2 positions short there, but I'd be long on that one and use that whole box as the risk because it's got to climb the wall of tears. All right, let's see. Well, since we're here, let's go look at LHX too, just for the heck of it. Just because we can. How nice is the TC 2000 bundle? I can get all these scans from all these charts. Yeah, so there's your 150-day look back. And what we have is wildly oversold on 150, 30, and 10, and a large 5-day range. So it's ready to break out again in either direction like a Godzilla. L3 Harris Technologies is a defense contractor. So how they cannot be making money is astonishing in this market. The only thing I can think of is that the radical Republicans who were holding out against McCarthy actually put in a motion to reduce defense spending by $85 billion back to last year's levels, and that would certainly have an impact on L3. So that might be the cause of this thing, but it's hard to see them going out of business, but you never know. My brother is offering a 20% coupon for snipers for the Rizuku courses. If you're in the sound of my voice and want that, just give me a shout. I'll send it to you. All right, let's go to sniper stats for the various types of movers that we had. Just down and dirty. So the one-day movers, I like looking at things that scored bigger than 2 standard deviations on the one-day move. And then if you look at these two, like Baxter and LDOT, when they're double large, That just triggers me, as do these two. Those are in play compared to all that peer group, which is, and then the S&P most volatile is based on a 5-day Z-score. Baxter right at the top of that. Microsoft still in play. Archer Daniels Midland still in play. Um, Daily stats. So in the Four Seasons, starting to see a lot more summer hitting here, and quite a lot of spring. So a lot of recovery. This is kind of a market that's trying to heal itself in that Kata 2 that we talked about this weekend. These really in healthcare are the only ones that are, that's healthcare beginning to fail all across the board. And you can see XLV healthcare is the only one in the winter. So that weakness is significant. Intel's an interesting play for tomorrow on semis and Texas Instruments too. So they're actually, you can see that the semiconductors are in play in our tactical set. Mostly some good news today. The Bitcoin and Ethereum recovering from the SBF debacle. Quite a few breakouts to the upside. Listen to the names. Tech, Mexico and Latin America, Treasuries, Euro-Asia, emerging markets, Europe. So more than half of those are the globals. So they're taking advantage of the U.S. sputtering here a little bit. But significant weakness in the healthcare sector. That's an actual thing. Now you got Pfizer, Johnson & Johnson, and Merck in that. So if you're looking to exploit weakness. Now, what that also tells me is if tomorrow the S&P begins to accelerate its sell-off and XLV is worse, then that's an auto short. Because you're getting a market that's rolling over in a bear, dead cat bounce, and you're hitting the weakest sector as you'd have it. So, all right, that's everything we have for today. Let's get this published and posted and be ready for tomorrow. And again, if you're in the sound of my voice and interested in that 20% discount, it is podcast 20. Is his?
Have him email you, or have him email me at
All right, take good care, guys, and we'll see you tomorrow.
wm.long@yahoo, and I'll send you the links.
Hey, brother, I got some work to do tonight. I'm gonna roll over the hosting to you if you want to stick around a little while.
Yeah.
If people got some questions of you.